Good morning, traders and investors. It's Tuesday, April 29th. Taking a look at the charts, not a whole lot going on. We have the Russell and the Dow and the SP 500. Russell and Dow slightly positive. The SP 500 and NASDAQ slightly negative. Not a whole lot has changed from the past few days. Again, keep in mind, if I don't cover something like an asset class, it just means nothing has changed enough to really have to cover it. So I know a lot of people keep saying it, you need to cover this every day. I'm like, if nothing changes, we don't really need to cover it. So if I don't cover it, it's most likely that nothing significant has changed, and what I said last time is still relevant. Now, if we take a look at the SP 500, you'll notice we have a bunch of mixed signals here. So we've got red bars saying we're in a downtrend, and then neutral, and then bullish, and then neutral, and then red, neutral, green. So we've got mixed signals in the market. And the same when you look at the daily chart. The daily chart has mixed signals on a bigger level, meaning the overall trend is down. A series of lower highs, a series of lower lows. But it does have kind of a little bit of a bullish formation. So these are mixed signals. Longer term is mixed, shorter term is mixed, and that is one of the reasons why we get out of the markets and we don't mess with it. It is starting to build a little bit of a bullish pattern. There is potential. If the markets have a big pop day, we might actually start to see the market turn into start a small uptrend. So we'll have to see how that takes place. It could be a bear market rally, one that could last over a couple of months and grind its way higher before potentially rolling over. The NASDAQ is pretty much the same. If we look at the 30-minute chart, we're going to have a bunch of mixed signals from red, orange, green, orange, red, all that. And again, it's kind of trading with a short-term wise, it looks like a little bull flag pattern. And I believe we're in this complacency phase. When we look at the overall market, people are accumulating, picking the bottom, and expecting this market to keep going further to the upside, and that the market has reset. I'm seeing lots of people say the new bull market is starting. We just had the correction. The tariff was just a spook, all that stuff. And that could be totally right. But it doesn't really matter who's right and which way we think the markets are going to go. The key is who knows when to stay out of the markets and who knows when to get in and how to manage those positions. And that's what we focus on going forward. Now, a lot of people are picking the bottom. A lot of people are saying the stock market just had a correction. It's ready to go a whole lot higher. Well, if we take a look at the leveraged bullish or long ETFs, meaning they're expecting the market to go higher, $6.6 billion piled in. We talked about this on Friday's mentoring session, the last mentoring session. And you can see here really over the past several weeks, everybody has been piling into the leveraged long ETFs, meaning they're expecting a bottom and then they're adding leverage to it because they want to make a fortune. They want to make a ton of money on this buy the dip, because most people who've got involved in the markets in the last, really since 2008 almost, has pretty much just been buy the dip and you're a hero. And so eventually one of those dips will turn into the one that they realize they don't know what they're doing, and that is what breaks everybody in terms of their accounts. It breaks their financial system, breaks their retirement strategy, lifestyle. And this here is telling me, this is why I keep talking about it, like people are buying the dip. They're picking a bottom, and it's a very dangerous strategy. It works most of the time. As you know, since 2008, if you can ride out a bunch of those big corrections along the way, but eventually one of them will be a stage 4 bear market, and it will take 5, 10, 12 years. It took 12 years for the NASDAQ to come back to all-time highs after the 2000 tech bubble. It took 16 years for the NASDAQ. So the big question is, do you want to wait 5, 10, 15 years potentially for the markets to come back, and to, if the markets do correct 30, 40, 50% and you're using 2 times leveraged, you're down 40, 60, 70, 80% or more by putting in a position like this. So people are picking the bottom, generally means the market is not putting in a bottom. And so we just need to be aware of that. In the grand scheme of things, not a whole lot has changed. The markets are mixed this morning. We do have bonds down a little bit as well. If you take a look at the chart of bonds, pretty ugly chart. Obviously, the tariffs created a whole whack of movements, and but the trend is overall down. Moving averages are sloping down. Our short-term trend, momentum trend is red. So overall, not a big fan of the bond market. When we zoom way out, it's still trending down and struggling to build a base and bottom here. If we take a look at where money is flowing, we do have the dollar moving up a little bit this morning. We zoom in here, you can see we've got a little bit of it's trying to carve out a bottom. I do feel like it's the most hated currency in the world. I do feel like everybody is out to kill it, and they're selling it and they're dumping it. And of course, we've had massive volume. And usually when you have extreme sentiment and everybody thinks it's garbage and it's going lower, usually means the market is ready and primed for a move higher. If we zoom into the price action, this could potentially be seen as a bull flag. We've got a bull flag pattern. We could see a pop here, which will really kick things into gear. And for all we know, the dollar could have a big move. If you didn't watch yesterday's video, the first 5 minutes, I show a very interesting comparison using the dollar, gold, and the stock indices that is really eye-opening to where I think we are in the markets. And it's going to play a big role of what the dollar is about to do, what gold is about to do, and what the stock market has already started to do, and the major trends that are about to take place. So make sure you watch the first 5 minutes of yesterday's video if you didn't watch it. It was a very good comparison. If we take a look at the rest of the market, we do have gold down today, giving back much of yesterday's little bit of a move up. Still has a bearish price action. This is the way the market does tend to like to move in a downtrend. It will move lower, and then it kind of drifts up, and then it gets hit with selling, and it drifts up, and eventually, this can turn into the bear market phase or a bearish flag. This is a move down. We have a bearish pattern, and then I think we're still going to see it head lower going forward. If we take a quick look over at silver, obviously it took the elevator down, fell 20+%, and it's kind of recoiling back up into kind of resistance into this high. We'll see if it gets more traction and wants to push higher. But again, gold is the play to be in. Silver is just definitely struggling. Miners, if we take a look at miners real quick, like GDX, they did come to life and break some previous highs, but they have a bearish pattern just like gold. We've got to move down. We've got this little bear flag or pennant formation that is pointing to another potential drop to the 50-day, which will also coincide with this kind of breakout move here in the market. If we take a look over at oil, down 1.6 this morning, so we're starting to see it roll over. It has had a bearish series of pauses and bear flags, and it's starting to pick up speed to the downside. We could start to see XLE, which is a play that we've been talking about. It has this had this big breakdown from this upper kind of channel here. That it's had that initial break, and now it's starting to roll over, or it's rolled over to the downside. Now we're looking for this bounce, and ideally we see the stock market in general move higher for several weeks or a month, and this will drift higher up into resistance, and then when it starts to roll over, it could become a very good inverse ETF play. On the XLE, there's an inverse ETF for the energy sector, and play the next leg down. But who knows? We'll see if it drops before there. But overall, waiting for the stock market to potentially hold its ground and move higher before we see another leg to the downside. If we take a look at our hot list, you can see our short-term trend analysis is we have a lot of short-term trends turning up. So that's telling us that the market is starting to firm up a little bit. Our longer term stage analysis, more of them are now turning into, they're starting to be bullish or recovery. So we are kind of getting a little bit of strength in the market. It's still risk off. Most people are pulling, or not most people, big money is still flowing out of the market. So big institutions have risk off. They're saying, lighten my equity portfolio. These are all the different stocks, all the different sectors. And so money is still rotating out of the market in general. There's the odd one that money is kind of flowing into, which is utilities, which not that it's rocketing higher, but it's holding its value fairly well over the last several months or over the last year or so. So money's been rotating into there as a defensive play. And of course, GLD, which is gold, money is rotating into there. So this tells us kind of the trends that things are in, short term, longer term. If money's moving in, the kind of the tide moving money, I mean institutions or big money that creates trends are moving into them or out of them. If we take a look over at our long-term investing chart, we are in a bearish phase. I think we are just going to have some type of bear market bounce. And the question is how far, how high? And then I believe we're going to roll over. And the question is, do we have a 20+% correction, or do we actually have a much bigger correction that resets and catches a lot of people off guard and does a lot of damage, which is what I believe is going to happen. And again, it doesn't matter what I believe. It doesn't matter if I'm wrong on all this and the market turns into an uptrend and screams higher. Our strategy just follows the trend. So if we do have a new trend kick in, we get long, we ride it higher. It's not about trying to understand or fully know what it's doing and guessing correctly. It's just when there's a new trigger, we follow the money, we follow the trades. And that's why I'm not a huge fan of following the news and fundamental data, because it really doesn't matter. We just have to follow price. Either we're in a bullish phase or a bearish phase. We either want to own stocks or not own stocks. And it doesn't matter what's going on in the world. Generally, the world is going, everything happening doesn't make sense for what's going on in the stock market. And so that's why it's always climbing a wall of worry. And then when the market's falling, like now, people are all trying to pick a bottom and buy, when to me, everything is pretty bad and things are getting worse. So the market and the data always is the opposite of what the average investors are doing. Anyways, that's it for this morning. We'll see what happens and take another view tomorrow at the open. Bye-bye.